So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Welcome back to NinjaTrader Live. I'll be your co-host, Tom Schneider, CMT, for this segment, which is Develop Your Edge with Anthony Crudele. And it's my pleasure to welcome back Anthony Crudele to the live stream. How you doing, Anthony?
Doing great. Back on Develop Your Edge, back in rainy South Florida. But, you know, markets are busy. I'm excited to be back. I missed Georgia already.
Oh, well, I saw some of what you posted on X, and it looked wonderful.
Yeah, it was great. I was in Georgia. I was up in the Highlands a little bit in North Carolina. I was in parts of South Carolina. Spent some time. Obviously, most of my time was in Lake Burton, but it was great. But happy to be back, and I think we're gonna have a busy September. We're gonna have a busy end of the year, Tom.
It's shaping up to be a crazy year, right? And we know that for various reasons. But you know, we were before while you were gone, Jim and I would talk every day about the low volume, right? It's just end of August, kind of dog days of summer, and Tuesday it was like a switch. Volume is back on. We're game on now.
Kids are back in school, Tom.
That's right. Oh,
everyone's clicking away.
I'll tell you, yesterday when my youngest one got on the bus, we brought out the champagne glasses, my wife and I.
So today we were going to talk about RTY, but I'm going to focus on MES. It really is the retail product that most people are trading, the MES or the MNQ. I would have talked about RTY today and M2K, which is the micro Russell. Let's not forget about that. But there's just too much going on in NASDAQ and S&P right now. And I want to talk about really, I want to lead up from preparation. Those of you that have been following myself or Develop Your Edge, or if you follow me on social, I put out my morning note every day. I want to start off there because I kind of want to lay the groundwork on how my morning note, which is free, and it just helps you understand market environment. It doesn't matter what strategy you're trading. And I want to walk through why the MES, the ES, was the favored long this morning. And I think it's just important. It's just to tie in all the stuff that we talk about, Tom.
Awesome. That sounds great. I love the idea of a morning note, and it's not easy to do. I'm sure but it probably helps you focus, and everybody gets the benefit from that. That's great.
Yeah, I mean, I write out my morning plan no matter what, whether I'm doing it for people or not. I probably don't get into as in depth if I'm doing it for myself. And a lot of times it would be on paper, just like, hey, man, remember what you're looking to do today. And so it's just something to go back and refer to what your mind, what you were looking at before the market opened or before you actually started to trade. I think that's so important because once markets open, most traders become too reactionary, and you need to be reactionary in a lot of ways, right? I mean, it's important to have that, intuition and I think instincts are built into it, but you also want to have a plan of what you are looking for. So if that does happen, that you take full advantage of it. And if it doesn't happen, you don't let the market take full advantage of you. So I think that's really important, not only for people, obviously you want to check out my free note to understand my mindset, but it's just really for you in general to slow things down, have big picture understanding of environment, and you have your own plan. Extremely important.
Oh yeah, I don't know how many times we've done this on the show where we do the daily look at the daily charts. We get an idea of our bias, and then 15 minutes later you're in the 10-minute charts and you're like, what did I say about crude? What did I say about the E-mini? I think I was bullish, think I was bearish. If you don't write it down, first of all, it's two things, right? You have a reference and it commits it to memory.
Absolutely. And to me, pen to paper just resonates so much better, I think, for traders. When you write something down, you actually did an action to do that. And so it'll trigger something to you in the moment, because this business is all about in the moment, is what happens in the moment. So let's get the screen share up. I know we've got it. So I've got Tradivate up here on the dome on the right, and then I've got my free Discord over here in the center. And I want to just go over something because I want to discuss what I said, and I want to explain exactly why I said what I said when we get to the charts. So one thing that's been happening a lot lately is divergent markets, divergent tapes. And I mean, I didn't see all of August, but it seemed like it was happening quite a bit more at the end versus the beginning. The beginning of August, everything was going down, but then you had this divergence, like, okay, Russell's weak one day, NASDAQ strong, or I heard you and Jimmy talking about Dow and how really you're not seeing the indexes work together. That's important. To me, that's the number one thing you look for when you're looking at the overall market environment. It's a simple thing that everyone can do. Compare apples to apples. What are the indexes doing on a daily chart? And when you look at them, compare them all with the same strategy, the same moving averages, the same way you develop support and resistance lines. Stay consistent across the indexes to understand where leadership is coming from, whether it's to the downside or to the upside. It's really so important to do that. Because when you come into the day, most of you, if you're trading the NASDAQ or if you're trading the Russell, or if you're trading the Dow or the S&P, you have an idea of where it is within the major indexes. And there's going to be a lot of times where if the S&P is stronger, you don't really even want to look at a short, or if it's weaker, you don't want to look at a long. And that's important to identify, because even if you're just trading a single index, that index, there's going to be inflows and outflows of these indexes. So in order to be a better executor of your strategy, you have to understand that. And just because you have a short-term strategy signal does not mean that you take every one every single time. You have to understand most of your success is going to come when the market's conducive to your strategy and you have the bigger picture going with your short-term trading. If you're fighting that, and you're fighting environments and you're fighting big picture trends, your short-term results are never going to be as good as they could be. And so that's extremely important. And that's how you really work top down when you're looking at charts. So getting to my note, I talked this morning, I said, technically ES is sitting on a range of support. And as long as the buyers can defend this area, I'll be looking to go long in this area. I think if we can get a push above 55.31, I think we can test 55.54. Above 55.54, we're looking for 55.71. If we don't hold 5,500, which was the bottom of my range, I felt that opened the door to selling. Then I would stop looking at longs. I maybe would look at shorts, but I was still more favored to the buy side. Typically, also, I think when you're doing your morning report and your morning, write-up, understand that you really want to find one side of the market to favor over the other, so you're not two-way trading too often. Most of you are probably getting caught up a lot of times over trading in ranges, even though you had one direction you favored, and instead of waiting for that one setup, you're over trading it. And then to talk about the NASDAQ remained bearish. It was the market I didn't want to trade today to the short side because the risk is too hard to be short NASDAQ here. And so a lot of times when I look at the indexes, I'll be like, okay, the NASDAQ's bearish. They're the downside leader. But in order for me to be short intraday, the NASDAQ could have a 400 handle ripper and it still could be bearish. And so it's impossible for me to manage risk short in NASDAQ in these conditions right now. I don't really love being short the indexes that much in general anymore, but when I do see short setups, obviously I will take them. But so I always am going to favor, when I'm trading between the two indexes, the area where I can manage risk the most, the best, the most efficiently, and that is S&P being long. And so I just wanted to go over that first, because coming into the day and having that mindset is extremely important, because when I come into the day, I cut through, no matter what the market's showing me, I'm ready for what I prepared for. I'm working some bids here in the MES down below. I'm going to use MES as a trading example. I think many of you that are new to the business should be using the MES over the ES. I obviously primarily trade the ES, but I think for examples, I like using the MES. It helps me during live streams and just show, technique more. And so I'm not held as much by price and, not overlooking at it too much. Right. And when we get to the charts, I want to go over why I started off with these things. And Tom, this is going to be repetitive for you, maybe many of the people, but the first place we always start is Bollinger Bands. And when you look at the E-mini S&P right now, I actually have an 8, 21, and 34 moving average up here. That's really the hat tips to to Ripster and Sati guys I follow. I've done podcasts with Ripster. It's just that moving average. A lot of people use it. It's not just them, but it's just to kind of give me a visual of what are these momentum traders, these moving average traders looking at from a daily perspective. I don't really look a ton at moving averages besides to give me an overview of what I think, the bigger picture, the longer term, maybe swing traders are thinking. And it shows you, it's just proof of the tape, right? If the tape is holding above these moving averages or it's below them, it gives you perspective. And it's an easy measurement tool to look at S&P versus NASDAQ and where they are relative. So we start off there, and we start off with my Bollinger Bands, 20 period, 3 standard deviation. And we look at this area and Tom, I've talked about this fib retracement, 70, 50, and 30% above the Bollinger Band peaks. That's where I start to identify. And I've talked about this quite a bit on this show and over the years, decades, really. That 50% line is kind of that retracement area that we look to see if the trend is intact, right? And so we came pretty much right back to it. And this morning in my note, I said buyers are defending support. So that's what I meant. They're defending the fact that we're 50% between these two Bollinger Band peaks, and it's holding it very clean. Went down there, hit it, held it. 3 days in a row now, we have not been able to take out that low. So when I look at that, phase one, look at S&P, they're holding, and they're holding that bottom moving average, that 34 period, which is the magenta one. And so we have an easy way to look at the market and say, we're holding.
Right. And when you say compare to other markets, as a measure, you'd look at the NASDAQ and say, okay, where is that in relative to those other benchmarks, right? Or those other measurements, right? So the moving averages, the 50% level, we've seen this on our measures, same kind of thing. It's a little bit more, it's a little weaker than the E-mini.
Yeah, and Tom, I'm going to ask you a question as a CMT. When you're looking at correlations, when you're looking at market comparisons, what is it that you were taught? What is your style? What do you look at when you're comparing a market for a correlation or a confirmation? Are you using different indicators, or are you using the same indicators, apples to apples, to see that confirmation?
You're definitely looking at the same measures, right? You're looking at the same, like you have 81, 21, 34, mine is 81, 21, 50. But the same thing, we're not changing the moving averages from chart to chart based on whether it's a, tech index or a small cap index. We're looking at the same thing.
And I think that, for traders, once you put into place what you're looking at on a daily, you could use the stuff I'm using, or Tom, or whomever, it doesn't matter. It's whatever resonates with you. Once you identify that, stay consistent with that, because that will build a routine and a repetition to when you come in and you want to identify the market environment before the day begins. You understand what you're potentially looking at, what type of day it is. Most people come into the day, they get so focused on their short-term strategy signals that they bypass the understanding of market environment. I never, ever, ever got ahead in my career by just focusing on super short-term signals. I had to understand market environment, even as a tick scalper in the S&P for a decade and a half, because I had to understand what was happening. 2008 was the best trading year I ever had. And that market environment was news driven, bear market, understanding. I wasn't stepping in the morning just because maybe I had a reason to step in and scalp against, a downward move, that I was in an overly, hurry to do that. Why? Because the primary trend was down. And because every time I was stepping in and getting long on these either news driven events or whatever was going on at that time, which was a lot. I could even go back to 99, 2001, so many different times. You get run over and you're like, well, I got a short-term strategy signal. I'm just going to follow my signals. Yeah, that is true in some respect. You want to be systematic, but you've got to understand what's happening on the bigger picture as well. We're actually getting close to getting hit here. And I want to quickly go over the NASDAQ. Boom, I started to get filled. This is my live account. And I'm going to go over why I'm working bids there in just a second. Hopefully they don't just film and blast through them right away, but nonetheless. So I've already got preventive measures in. I've got a stop, and also on Tradivate, which is cool. You can put in how much you're willing to risk on a day or on a trade, and it'll blow you out of it. And so I modify that every time before I come into live, so I don't get steamrolled while I'm talking to my boy Tom, right, Tom?
Right.
So NASDAQ, quick look at this. When you look at the NASDAQ here, you see that it's weaker. I don't need to go into explanation why, but you see it. You look, it's weaker. Okay, it's below the moving averages. It's below the 50%. Okay, we've spent enough time on this. We understand. I'm comparing apples to apples. I think we spent enough time talking about that. Let's get into the nitty gritty here a little bit, Tom. A couple of things I want to talk about. So first thing, why am I looking to buy them here? So Tom, what I'm looking at is an order flow chart. Okay, I'm looking at what's happening in the order flow on a regular trading hours only. I know me and Kags have to have a conversation about real overnight versus
regular trading hours.
Regular
right?
trading, right?
Yeah.
And I like regular trading only, and I like 30-minute for this. And so when I look at this, I look to see where the morning flow was. So I already know I want to be buying S&P. I'm actually probably going to get stopped out of the first half of this position. We'll see what happens. Yeah, it did. It stopped me out. Okay, so I bought 6 there. I was going to risk $300. I always say I'm going to do $300 worth of risk. I'll do everything in increments of 3. And so what I did there, why I had such a tight stop on the initial, was because if the market blew through there, I want to wait and see what happens reactionary off of this area. I wanted to go back and buy this high volume area where buyers came in this morning and defended on the way up on the first 30-minute bar. They were buying 31s, 31.75 area. Okay. So this area was a high volume node on the buy side. You could see it. Market didn't go back and retest it. Sellers are actually coming in now below this area of support. And I put my stop in relatively tight. And the reason I did was because if the buyers are going to come back in and defend it before this morning's low, why do I want to get step in with a full position and just get creamed if all of a sudden it's going to go to a low, which it might do right now, right?
Right.
And I'll show you my full trades of what I've done earlier as well. And so I step in here because I want to be with the trend. I said this morning, I looked at these levels. I was looking at some of the moving averages and things, and I put together an area of support and resistance, looking at order flow, my indicator and other stuff. And what I do is these are the resistance areas that I had up top where I said, look, we could test 54. And then I said above that can go to 71. I even had a 63 area node in there. Those are just high volume areas of interest where if we don't go back and retest them in intraday, we might go back on a regular trading hour session and trade at high volume area. And so when I have this order flow chart up, it's important to me because anytime, look at where we are live right now. Right now, earlier this morning, we had a lot of buyers come in around 31, let's call it 31 to 33. That's where I was working my buys, right? That's why I put a stop in at 29.75 for half the position, because I'm like, look, if it doesn't defend it immediately, watch the action. See how the sellers are coming in now, Tom, and what they're doing is the delta is selling off of where they bought them earlier, right? And so these guys or girls are below where they bought, where the majority of the volume was. So the fact that they're unable to defend it, sellers are coming in.
Yeah.
We clear on that, right? So you see how this is pinned against this. So now what's happening basically, and I actually don't even like the way that this is looking right now. And so ultimately my stop was going to be just below this bar's low, and I'm just going to blow out of it now anyway. And so I took a loss there, and I'll show on my MES chart. I have it up there that shows all my trades for today. What I wanted to see was on a retest of this area, if we defend it, we continue to go up and test these previous volume nodes where liquidity is, right? Right now, you could see in this area, the bulls failed to hold it. And look, I'm glad I got out of it. But make sure I'm working nothing else. I actually had ES working too. I canceled those beforehand. Okay. Just want to make sure. Log 15 S&P. I'm sitting there chatting it up with Tom. But so nonetheless, I am continually going to look for areas where I see battles through the order flow charts. And I'm going to try and step in and buy areas where I see bulls defending or where I see markets get squeezed into lows. Like this is an old high volume node as well, right here, 18.25. If we get back down here, let's go back to the daily. Okay. We're above that 34 moving average. We're above my 50%. If I see us go back and retest something like a high volume area where there were sellers in this kind of a squeezy low. And what I mean by a squeezy low is that you had sellers that came in here, and it's light pink. It's not super bright magenta, but that color matters because the darker the color, the more volume that comes in. And so you're seeing buyers absorb it, right? And so you had a light amount of sellers in here with a high volume area, but it wasn't like it was super aggressive like we saw earlier with the dark blue and what we're seeing with the dark magenta now. This is aggressive, right? So the darker it gets. So I look for areas to get back there. Now, if it were to come back down here and all of a sudden get dark blue defending this area where people were short, because remember, if a lot of volume was sold in an area or bought in an area, when it comes back there, a lot of times those positions are still on and those stops are relatively close.
Right.
So you got to know that. And so when it gets there, are they going to defend it? Or all of a sudden the sellers come back in and they're like, guess what? We're winning now. And whoop, sorry, buddy, and they run through it. And that's ultimately what I think we saw right here was buyers bought this morning. Things worked. We had that data come out. On a retest down there, buyers are going, well, maybe we're not that confident in these right now. And you saw a little squeeze out of them. And so now we're in this moment where you're like, okay, let's wait and see, wait again. But I had waited from this morning. Let's go back to what I did this morning. And this is all of what I had done. And so this morning I bought. So we watched opening range. I was actually waiting to find some areas where I could buy. We had the VWAP get above the top of the 3-minute opening range. We've talked about this before too, Tom, right? So once we got this VWAP was getting above it, I just bought one. I tried to buy more. I couldn't get them. Market just took off on me. It was right before the data release. Nonetheless, and that went up and I just sold. So I made, what did I make on there? 12 handles or so, 13 handles on a 3-lot. And I did that because I covered them because where my morning targets were, right? And so when they got up there, I got out and I'm rotating in and out of them. And now we go back to where we were here. We're back in that zone near areas I could manage risk. So I stepped in and bought again. I had been waiting for those areas to get tested. I knew the bottom of opening range was 28-ish, right? My 3-minute opening range bar. Okay. And I said to myself, even when I was working them here, I said, man, if they start to push below this low, I'm probably going to get squeezed. And that's why I go back to it. It's a good risk reward for me because I wait for that squeezy pullback. And if it defends it, my risk reward is great. I'm risking what? 3-4 handles to make 15 to 20 again.
Right.
So I'm putting myself in a position to where, like that one, I had no problem just hitting exit all and just blowing out of it because I'll get back in. I usually after the second time, if I were to start to see it hold here again and I were to get back in, if that one doesn't work, I'd probably step away from it. But for the most part, that's the layout. And I know I kind of threw a lot at everybody, but I wanted to be able to do that because that's really how everything builds and stems for me. Start off with homework, get into order flow, see what's happening in the price action as we get to these levels. And I really just going to stay on one side as long as we continue to defend this area.
Got it. Yeah, that makes sense with the revisiting of the area where we saw a lot of buying. You come back and a little bit lower. That's the interesting thing though, which I think might be hard to comprehend a little bit. It's where there was buying before, now there's a lot of selling below, but you explained it, right? You explained it that a lot of those positions are still on, or those people who went long are now feeling the heat. And what do? You cut your position, and that adds a little more selling pressure when they do that.
This morning we had 9,123 to the buy side, right? And so this volume, these high volume, dark volume bars that you see here, that's where majority of the buying took place.
Yeah.
Okay. So what happened is that this was the area to where the sellers tried to battle. That's where the liquidity was. So at that moment, there's a lot accumulated there to the buy side, and the sellers tried to defend it and they lost, right? Now they come back down here. These buyers are going, we're a little underwater now. And they all of a sudden you see selling come in and escalate a little bit. And when you look down here, cumulative delta is still positive 5,500 for the day. We got up to positive 12,000. You could see here, negative 6,700 on this bar. So the selling came in the order flow pretty heavily to the sell side. And it's basically taking out all of that, not all of it, but it took out 50% of the buying from this morning.
Right.
And so sometimes it doesn't necessarily mean, obviously it's taking us further in price on the sell side now because there's just less buyers of interest here. So the minute those buyers are trying to get out, they're aggressive orders.
Yes.
Okay. And that's why it's taking price further. It's taking price further because, you would say, well, they still are net buyers versus sellers. Why did it make a lower low? Well, it did because in this moment, these guys are going, look at me. I just hit the bid. I don't even know where I got filled. I didn't care. Right. The minute I see selling come in below an area of interest. So where did I get filled at? Right. I just went to the market. You saw me hit them. So I sold 2 evens, 2 quarters, 2 halves, 275. No, that's where I bought. I sold 28s. So that's where the market order came in. So I sold 55.28. So I lost $4.5-$5 on those. And on the first stop, I lost 3. Right. And so still net up on what I've done overall for the day. And I will continue to watch. Volume right now is come into the sell side quite a bit. Okay. And what you're looking for now is, can they regain opening range? Because the VWAP is still above. And what's interesting about this is that when you look down here, when I look at what's happening here, the selling is taking place below that level of interest. And if it were to start to regain that, we would be back above opening range. The VWAP would be higher. Watch for some stability. Then you'd watch to see if sellers can try and regain a low. If they can't, that's a moment to maybe step in again.
Yeah, that makes sense.
Now it's a wait and see game now for me.
Right.
Now I probably, who knows, I may not do anything for who knows how long.
Question for you. Jim had a question. When you see divergence looking at cumulative delta, when you see divergence from price action versus cumulative delta action, maybe market rallies, but we see sellers step in, continuing, let's say, a downward trajectory on the cumulative delta. I think we saw that earlier in the Dow. What does that tell you? If you had like a minute or 30 seconds to talk about it, what would you say about that?
I'd have to see exactly what you're saying. Maybe let me pull up. So what were you guys looking at?
I think maybe the Dow.
And were you looking at it in an order flow chart?
Yeah, we were looking not in an order flow chart. We had a cumulative delta on a regular candle chart.
On a regular candle chart. So let me just do this.
Yeah, exactly like that. Yeah.
And the question is, when you're looking at cumulative delta, sorry to have you go over it again, because I want to be able to see it so I understand exactly what you're saying.
So when you have so an example on this chart might be hard to find, but let's take a look at maybe 4 bars ago, right? You've got a market that's moving sideways. Okay, there's maybe no movement, or maybe it's down, but buyers are coming in, right?
So it's
Or
moving, the cumulative delta is going against trend.
correct.
Got it.
Yeah.
And so I go back to, it depends on where we are versus previous areas.
Okay.
So usually if I see something where it's like, let me go back to the S&P chart, because this is while that Dow chart is loading. So like, for example, what you're saying is if we're going lower and the delta's to the buy side right now.
Correct.
Okay. If I have a level here, so that there's 2 ways to interpret it, right? Most of the time when I see market delta going opposite of trend, a majority of the time, that means that the liquidity is being absorbed, which means that like the market orders are trying to take out an existing offer or bid.
Okay.
And it's bigger. And so what it means is that you really want to be careful fading that, meaning that if they're buying and it's going down, I don't want to really be long, because
right.
It's like, I go back to it. I think this is the best way to think about it. I remember I used to watch, like, you know, OBJ, Praz, and the S&P. If all of a sudden I would see, you know, Joey come in, you know, Goldman would be like, you know, 100 and even, right? And Joey would be like, buy them. That's a market order, right? They're a limit, and he goes, buy them. And all of a sudden they go 100 and even. You're going, uh-oh.
Right.
Because now, ultimately, yeah, that was an aggressive buy. The biggest local just bought 100 and even. But, you know, Tia or Halfman, the Goldman brokers, are like, we're still at even, Joe.
Right.
You know?
Right.
And all of a sudden they're like at a half. And you're like, oh my God. And then somebody else goes, buy 50. They go, sold at a half. And you're going, this is trouble. So it means that, think about that, everybody, and because the machine's the same way. If a trader is getting down there and they're buying an offer and it can't turn it as an aggressive offer, that means that the offer is being refreshed more. Now, that doesn't mean that eventually it won't turn when that order's got to get done, because a lot of times that means that's why you don't see it a ton. It means that the order is getting refreshed and somebody has to sell a bunch,
But,
or buy a bunch.
Right.
And as the aggressive orders are coming in, they're just not able to turn that order out. And then all of a sudden you could see us, you know, it flips, and all of a sudden the buying turns into more buying. Because now if you're a local or somebody who bought it and it's going your way, guess what you do? You buy the offer again.
Right.
And you do that because that's how you really can tell if they're done. Because if all of a sudden that turns now they're going to run them. And that's what market makers will do. Awesome. Hopefully that made sense.
It did. We're running up against time. Do we have any other business, Anthony?
I just want to make sure everybody's aware. I mean, look at, you know, obviously we talk about CME Group products here all the time. And I think that if many of you are new to futures trading, go to cmegroup.com, understand, we talk about S&P and NASDAQ today, understand trading around the clock, 60/40 tax treatment. There's a whole page, all this information on here that you can learn more about futures, understanding the basics of S&P and NASDAQ futures. I mean, if you're getting into this business, you have to go behind the scenes, beyond the charts, and understand what's there. CME Group has great resources for this, and you can see all of this on cmegroup.com. That link will also be in my YouTube description and on my website.
And they can find you, just search up Anthony Crudele.
Anthony Crudele. You can find me on X and my free Discord. If you want my note, it's in there. I put it out every day. I got an email list for it. It's all free, and I put out a ton of stuff in Discord. We got a great group and great. I'm actually gonna be going in there in about 1 minute when we're done talking about what I'm looking at next.
All right. Well, thanks so much. It's great to see you again, and we'll see you next week.
See you next week.
All right. Take care, Anthony. Up next, we will be right back with the new NinjaTrader Book Club. Stay tuned.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years,